let's get to talk to the head of the DMO, the Director General. Patience Suniha is live to us from the FMDQ Exchange Place. Thank you very much, madam. Good morning. Welcome to the program. A very big day here for the DMO. This is not the first time. It's not the second time. So the DMO and FMDQ, this is the symbiotic relationship. What are we listing today, and what size is the total and the trenches, Madam DG?
Thank you very much, Bosin, and I'm glad to be here again. Like you did say, there is a partnership with all our stakeholders in the market, but the FMDQ is indeed special because it is a dedicated platform for fixed income securities. Okay, so what we're listing today, actually, the first one are the bonds, the Eurobonds. So today they're just Eurobonds transactions, our capital market transactions for last year. The first one is the $2.5 billion Eurobond that we issued in February. And that is significant because that was meant purposely for the refinancing of domestic debt. Okay, so we had approval for $3 billion US, but we had issued 500 million in November 2017, so the balance was issued in February. And with that $3 billion US, we were able to redeem about 1 trillion naira of treasury bills. Okay, so the second one, and again significant with that transaction, is that we had a new tenor of 20 years. The other one we are listing today are the bonds, Eurobonds we issued in November 2018. Again, that was in 3 tenors, but purposely for financing the budget, capital projects in the budget. So that gives you a total of about almost $5.4 billion US that we're listing today.
Okay, so all of these, how do they play into the overarching budget management strategy of the DMO on behalf of the government of Nigeria?
Okay, I'll say the two of them were actually working towards achieving the debt management strategy, which is the approved strategy for managing the public debt. So the first one, the $2.5 billion US, was used to redeem domestic debt. What did that do? It helped us to reduce our debt service costs because all those were Nigerian treasury bills, and we were borrowing at very high rates at some point at a discount rate of about 18.5%. Okay, so we're able to reduce the interest cost of borrowing and also extend the tenor. Like I said, those bonds were issued for tenors of 12 years and 20 years. So it fit into our strategy of trying to reduce the debt service cost, but also achieving the target of 60% to 40% between domestic and external debt. But don't forget that included in all of that is also to free up space for the domestic market. So that was the first time really that we were using external financing to redeem domestic debt to achieve the objectives of the debt management strategy. With the $2.8 billion US that was issued in November, that was clearly within the budget. And the strategy since 2017 in the Appropriation Acts is to split the new borrowing to finance the budget 50 equally between external and domestic. And the whole idea is, yes, you have to, there's a deficit that needs to be funded, but let's not take all from the domestic market. Let's go external. Same objective, reduce debt service costs, free up space in the market, and try to achieve the debt management strategy objective of 60 to 40%. In all of these, I must add that they also contributed to increases in reserves.
Okay, so what would be, we haven't heard anything about whether there will be a Eurobond offering to finance 2019 budget moving forward. So the administration is going into a second time. What's the strategy outlook? How soon are we hitting the marketplace?
Okay, let's just say that the Appropriation Act 2019 has a deficit, and a large part of it is to be funded by new borrowing of 1.649 trillion. Okay, 50% of that has been provided as external right there in the Appropriation Act. So it means we will be borrowing externally, but this time around, we're trying to explore all the options, starting with those that are, cheaper, if I may use that word, concessional, semi-concessional, before we then determine is there a shortfall, is there a balance that we should take to the international markets. Okay, so that's what will determine how much, we raise in the international market. But there is a borrowing of 825 billion naira, which give or take translates to about 2.7 billion US dollars.
Okay, finally, Madam DG, just before, in about a minute or less, we'll have the 30-year bond on the market. Is there any plan to increase this anytime soon, short to medium term, to add another?
You mean to increase the tenor or something?
Yes, yes.
Okay, let's just say that we work with the stakeholders to determine what tenor is suitable for them. So don't forget, the longest tenor we had before was 20 years. We introduced 30 years because clearly there was a need for it. There were operators in the market who needed long-term instruments to match their liabilities. These are really those insurance companies, particularly those engaged in the life and annuity business. So as we engage with stakeholders further, if there's a need to lengthen that tenor, we would do that, okay? Because our strategy is two-pronged. We need to meet investors' demands, but we also need to raise the funds to finance the budget. So once those two objectives align, we are good to go.
Thank you very much, Madam.